This always gets me in the mood when I'm thinking about crypto talk every time I hear it. Think like that X-Files, huh? Or even the X-Files music. We're back. We're going to get started in about another 30 seconds. Continue where I left off. Welcome back, welcome back. Thank you for sticking around. Crypto education is very, very important. Someone asked me, "No, Brandon, aren't you afraid, they might come after you, people might come after you?" Look, I'm a Morehouse man. That's what Dr. Martin Luther King Jr. went to my school. We're bred and taught to stand up and speak. I'm not afraid of no man. God has me. Pray for me, though. Let's see, who did I call out today? I called out Russia. I called out Trump. I called out the Republicans. I called out the MLM seven-figure leaders. I called out Kevin Thompson and Troy Dooley and Tom Chenault. Yeah, then I got shut down. Huh. Coincidence? Who knows? But let's get back to the topic of what we're talking about here. Taxes. So I'll go back because we're still at the beginning of this article. And as I said in the first half of the Facebook Live, and I'll probably merge these two together when I put the recording back together. So let me set that up. All right, and we are back. I apologize for the technical difficulties. Let's get back to this, and I'll start from the beginning. I am not a licensed financial advisor to be giving you any tax advice on anything. Consult with a professional. I just share my own opinion and my own thoughts on the subject. I fully advise for you not to try to ditch and screw over the IRS and get over on them. Report and pay your taxes. That is my official statement. So investors in Bitcoin and other cryptocurrencies should be celebrating their gains now, because in just a matter of days, the 1031 tax loophole that's been a financial benefit for many will be gone under the new tax law. The tax reform bill, which passed both houses of Congress, was signed into law by President Trump last week, eliminating the exemption for like-kind exchanges outside of real estate. The removal of the loophole, coupled with the IRS increased desire to find and prosecute, that's just kind of where I got cut off, find and prosecute those with unreported digital assets, means not everyone in the cryptocurrency world will be celebrating a happy new year when the clock strikes midnight on December 31st. And every single cryptocurrency exchange becomes instantaneously taxable. Do you guys realize just how screwed you got by one sign of Donald Trump, what he put into law? I mean, I got to do it. I got to go back. No, I don't need to release my tax returns because they're under audit from the IRS for the last 7 years. So no, I'm not going to release my tax returns, but I'm going to sign the biggest overhaul of the tax code in recent history over the last 30 years. And trust me, believe me, this is not good for me. This is going to hurt me. My rich friends are not too happy with me right now, but that's okay because we're going to make America great again. And this is for the middle class. This is for the little guy. Quote unquote. And then the experts look at it and say, oh, wow, this is the biggest tax cut the rich have gotten in over 30 years. And then if you're for the little guy, you realize that cryptocurrency right now is the best industry that the little guy can get involved in and change their financials or financial situation literally overnight. And what does the government do? Specifically, this government puts a tax bill that is supposed to help the little guy, but chops our legs off immediately. You guys see how that, say one thing and then do something completely different. Don't believe what you see happening. Trust me, believe what I'm telling you. And people buy into that. It blows my mind. There's probably people listening to me right now that will support till the day they die and will never admit that they're on the wrong side of history. Let me shut up, because this is what got me shut down last time. So let's just continue with the article, because this is huge here. The removal of the loophole. Up until now, many Bitcoin and cryptocurrency investors have avoided paying taxes on cryptocurrency exchanges. Now, what does that mean if you don't understand what that means? Exchanges is like Poloniex, Bittrex, HitBTC, Bitfinex, Binance. It's the places you go to buy multiple cryptocurrencies and trade on them. And if you know how to trade, then you know what you do. Most people enter it with a bunch of Bitcoin, and they use that Bitcoin to trade on the other coins. And this goes on every second of the day, 24 hours a day, all around the world. Now, this elimination of this tax, this loophole, is now, I'll just read this. Up until now, many Bitcoin and cryptocurrency investors have avoided paying taxes on cryptocurrency exchanges, and that's where most people hold their stuff, through an interpretation of an exemption in the tax code called the LikeKind Exemption. The exemption allows for the exchange of property without creating a taxable event. That means if you move from Bitcoin and you buy Litecoin with your Bitcoin, or if you take your Litecoin and you buy Ripple, you're not taxed on that because it's the same type of event taking place. That's been the loophole. Historically, the loophole has been used by traders to exchange items such as real estate and art without having to pay taxes on the transaction. At the time of the exemption's drafting, cryptocurrency had not come to fruition, and thus cryptocurrency was not listed with items such as stocks and bonds that were not allowable under the exemption. However, in 2014, the IRS did release guidance stating that Bitcoin and cryptocurrencies were considered property and not currency. So if you consider it property, then it falls under this law that is exempt when you're exchanging one property to another property. That's called the like kind. So they kind of shot themselves in the foot by calling it property and also having the law. So what are they best at doing? Oh, we'll just change the law then. We'll just change the freaking law to suit us. So numerous cryptocurrency investors and their lawyers have interpreted the exemption to allow for the exchange of one cryptocurrency for another without an immediate tax obligation because the IRS considers cryptocurrency as property. This is all factual. It's all true. Donald Trump changed all that. Under this interpretation, an investor could exchange Bitcoin for Litecoin without the duty of paying taxes on the transaction. So right now, the only thing you pay is a fee. You know, whatever exchange you're using, and you want to use your Bitcoin to buy Ripple, the exchange charges you a fee. Add on top of that fee, you're going to get taxed as well on every transaction. Let me continue. Under this interpretation, an investor could exchange Bitcoin for Litecoin without the duty of paying taxes on the transaction. Most cryptocurrencies do not allow for direct purchasing via US dollars. They require another type of cryptocurrency, which makes this provision extremely relevant to the cryptocurrency investing world. The IRS was asked for guidance on how Bitcoin and cryptocurrency relate to the like-kind exemption by many groups, including the American Institute of Certified Public Accountants, but has yet to answer publicly. You know why they haven't answered publicly yet? Because if they make a statement public, it then becomes the new precedent. They're waiting to see how things play out so that they can change the rules, the laws, and the game. Have you ever, if you were a kid and you were playing with your relatives, big cousins, and you always got that one kid that's playing the game with you, and you figure out a way to beat him, and he doesn't like getting beat, so he changes the rules mid-game. That's like playing an NBA basketball game and the refs deciding to change the rules. Oh, no. 5 fouls and you're fouled out of the game, not 6. We're going with 5 fouls now. Oh, no. That 3-point shot, we're going to make it only worth 2 points now. Mid-game. That's what the IRS and the government is very good at doing. Changing up the rules. The Bank of America just did this. Those of you that own a business account with Bank of America, they just changed the rules. If you purchase Bitcoin or any cryptocurrency with that business account, there's a set of rules and instructions that you have to follow and report, or they will freeze your account. And when they changed this rule, they didn't even notify all the business account holders that the change even took place. I hate playing with people like that because you can never win. So let me continue. Although cryptocurrency investors may not have been subject to taxes when exchanging one cryptocurrency for another, they were subject to income and capital gains taxes according to the IRS. Coins held less than a year are taxed as regular income and taxed at a rate based on the investor's income, which could vary from 10 to 37%. Conversely, coins held longer than a year are taxed as capital gains and are subject to rates as high as 25%. So in other words, if you exchange your coins, if you're reporting them, into fiat currency, you're taxed on that. What they're now saying is, even if you just hold your coin and you don't even exchange it into fiat, you're going to get taxed on that. Not only the normal property capital gains tax, but we're also going to charge you if you decide to transfer that currency from one crypto to another. So we're going to double tax you, plus the fee you have to pay from the exchange when you do that transaction, plus the fee you pay if you move that money to your bank account, fiat currency. What is Ronald Reagan's old motto? When something comes out that the government didn't create, criminalize it first, ban it second, and if all else fails, regulate it and tax it to death. That playbook is being implemented right now. Let's continue. Even though the IRS has been quite clear regarding the taxation rules surrounding Bitcoin and cryptocurrencies, many cryptocurrency investors failed to report their gains and losses on their tax returns in previous years. Specifically, check this out though, this is just crazy right here. Only 802 of an estimated 480,000 investors who utilize a website called Coinbase for cryptocurrency investing reported their gains or losses to the IRS between 2013 to 2015. Only 800 people did. The lack of reporting caused the IRS to seek a court order to force Coinbase to relinquish the records of investors from 2013 to 2015. Coinbase fought the request, but ultimately had to give the IRS records of over 14,000 investors who purchased or sold cryptocurrency on their platform from 2013 to 2015. See, this is what I'm talking about. They'll go back on you. You might have thought you got away with it until you're going to get a letter. Brandon, will you please post your sources? Oh, this is a new Facebook Live, so I didn't post this article. Let me post that in the chat box. It is on the first one, before I got shut down. The man is listening. I got to watch what I say. All right. I posted the link in the chat box. In anticipation of cryptocurrency investors continuing to fail to report their gains and losses, the IRS, this is important to follow for those of you guys that think you can get over on this, the IRS has been employing various means to pragmatically identify Bitcoin investors, including licensing a software called chain analysis since 2015. Guys, even though Bitcoin, the transactions are anonymous, the blockchain is public. The addresses are public. If the IRS figures out how to have some quantum-based type fast, smart AI computers, which they eventually will have, it's only a matter of time, they will backtrack you. They've been doing this from 2015. In the contract between the IRS and Chain Analysis, obtained through a Freedom of Information Act request by the Daily Beast, it states that the purpose of the partnership is to help trace the movement of money through the Bitcoin economy and find those who may be trying to conceal income. They are already on your ass on this. Don't get cute with it. Contrary to popular belief, Bitcoin is not truly anonymous. Like many other cryptocurrencies, it's pseudonymous. Did I say that right? Pseudonymous, which allows chain analysis to identify investors. Just like an author's pen name or a personal cell phone number, a Bitcoin address is only as anonymous as one allows it to be. Once a party receives an address with a personal identifier, the address, someone's blowing me up, the address can be linked to an investor, and the address may be searched and tracked down on the blockchain, Bitcoin blockchain. The chain analysis software deploys millions of tags to help trace the and identify Bitcoin transactions between wallets and on exchanges. Chain Analysis website boasts that they have checked over $15 billion worth of Bitcoin transactions on behalf of their customers, and according to the co-founder, the company has information on 25% of all Bitcoin addresses. Think about that for a second. Think about that. 25%. Chances that they've got you? You want to roll the dice with that? Let me continue. Although being taxed at the time of exchanging one cryptocurrency for another may seem trivial to the outsider looking in, it has substantial financial implications for those who have a diversified portfolio, which is a majority of the cryptocurrency investing community. With the skyrocketing increases in the value of many cryptocurrencies, including Bitcoin, the change will be hard to ignore. Now investors not only face high transaction fees, income taxes, and capital gain taxes, but taxes when they exchange one cryptocurrency for another. Already being taxed 3 or 4 times on this stuff. Given the current cryptocurrency landscape, in which most cryptocurrencies cannot be purchased directly with US dollars and require a 2-step exchange, the altering of the LikeKind Exchange provision will dramatically affect the bottom line for many cryptocurrency investors. With the IRS spending more and more resources on legal battles and technology to identify Bitcoin and cryptocurrency users, the effect will be the crypto world responding with what they do best: cryptography. The Tax Reform Act of 2017 may inadvertently make 2018 the year of the truly anonymous cryptocurrency. And the biggest one that we have out there right now is Monero. So a smart man might want to invest some money in Monero. I'm just saying. So what are my thoughts on this? I think the article speaks for itself. I don't need to break down line by line. I did that the other day. What I will say publicly is make sure you get with a good, tax attorney, a CPA. Make sure you've got all your records in place. Don't think that you're going to get around the exchanges, because if they're operating in the United States legally, like Coinbase, you might get a 1099 from the exchange, because the exchange doesn't want to get in trouble with the IRS and the SEC. So the exchange is going to report to them that you made, I don't know, $2 million. And then the IRS is going to look, wow, did this person report they made $2 million? No. Prosecute. So if you start getting, don't be surprised you start getting 1099 from exchanges. That's why people that I know live by this motto. I don't buy Bitcoin. I earn Bitcoin. There's a difference here. All right, now, yes, pay your taxes. You're going to make far more money than the money you got to pay in taxes. Just eat it. So here is...